was a part of the team that helped launch Jimmy John's, Culver's, Auntie Anne's, European Wax Center. Basically, I learned how the business model worked, learned how the franchise model worked. Thing that caught me right off the bat, I'm a huge fan of entrepreneurship. I completely believe in small business, and I believe in it not only for the person who owns the small business, but also all of the positive elements that come off of it. Job creation, innovation, growth, the ability to maneuver and adapt and evolve. All those things in small business, I feel, do those things effectively than gigantic companies that move like a slow-moving aircraft carrier. So I fell in love with entrepreneurship first, and then franchising, because I realized it's a vehicle to help more people get into business for themselves. It's a conduit to pull people into entrepreneurship. If it's done right, it's this phenomenal combination of the franchisor leveraging resources, buying power, brand recognition, all those things, and the franchisee operating the boots on the ground.
So imagine what it would be like to one day sell your business for $100 million. Now, this isn't just a pie in the sky number. In this episode, I sit down with Chris Connor from Franchise Marketing Systems, who is an industry expert on helping people franchise their business. He's worked with brands like Jimmy John's, Culver's, European Wax, and nearly 800 other brands, which created over 10,000 franchise units. Now, we break down who's a right fit for franchising a business, how franchisors are selling for 20 times multiples of profits to private equity firms, and how they're selling for over $100 million. We also talk about franchising versus licensing. What's the difference and what are the pros and cons? Now, if you're someone who likes to think big and the idea of one day exiting a business for a massive sum of money, if you're interested in franchising your business or seeing if it even makes sense or how it works, we have a free guide for you on how to franchise your business. Go get it now at franchiseempire.com/FMS podcast. Sit back, relax, and enjoy the episode. All right, well, welcome to another episode of the Franchise Empire Show. Today, I have Chris Connor here. Chris, thanks for joining, man.
Thank you for having me, Tara. Great to be here.
Yeah, so today's conversation is going to be exciting because it's a unique one, a unique perspective. I feel like the demand for franchising is as high as it's ever been. Do you feel like that's an accurate read? Is that what you're seeing? Because you've been in this space for what, 20 years now?
23 years, and absolutely true. In a lot of ways, it's almost a little bit counterintuitive. At least it was for me when the pandemic hit, when COVID came around. To me personally, I thought franchising might be in trouble, just like maybe every business thought they might be in trouble. But what it did was it fueled people getting into business for themselves, pushing them to make the move to become an entrepreneur. And that movement is what has fueled the franchise market. There's been this crazy trend of people becoming entrepreneurs, and a part of that group ends up in franchising. The whole franchise presentation is entrepreneurship with a safety net. We'll give you a blueprint and a plan. And some entrepreneurs are comfortable going into it completely on their own. Others would like to have that structure, would like to have that plan and that support and that mentorship that comes from a franchisor. So it's been the best market I've ever seen in the last 3 years.
Yeah. Yeah, it makes a lot of sense. And, I think that, a lot of people always think, well, should I start my own business? Should I buy a franchise? It's, I think, one of the most common questions that at least we get or we hear. And, they're not mutually exclusive. My thing is learn how to run a business through a franchise system, learn the structure. And then later on, like, you can always sell it. You can always then build a team out so that you can then start your own thing. But I just think it's something that's always important for people to think about. But tell us about, like, we have a lot of good stuff that we're going to get into, like mistakes people make in franchising their business, who should franchise their business, like what's the opportunity. Actually, something that would be interesting to talk about is kind of the consolidation that's happening with private equity coming in and buying franchisors. So like these entrepreneurs having the opportunity to have these huge exits. But before we get into all that exciting stuff, tell us about FMS. What do you guys even do?
Yeah, so I've been, as we've mentioned, I've been doing this work helping companies become a franchise for 23 years. Like many entrepreneurs, I started out as an employee and worked for another company that did the same type of work. And I worked for a firm in Chicago that did franchise development work, and I started with them in 2001, and then left there in 2009. But my time there, I was able to work with some really prolific franchise brands that I was a part of the team that helped launch: Jimmy John's, Culver's, Auntie Anne's, European Wax Center. And basically, I learned how the business model worked, learned how the franchise model worked. And the thing that caught me right off the bat, I'm a huge fan of entrepreneurship. I completely believe in small business, and I believe in it not only for the person who owns the small business, but also all of the positive elements that come off of it: job creation, innovation, growth, the ability to maneuver and adapt and evolve. All those things in small business, I feel, are a small business is better positioned to do those things effectively than gigantic companies that move like a slow moving aircraft carrier. Um, so I fell in love with entrepreneurship first, and then franchising, because I realized it's a vehicle to help more people get into business for themselves. It's a conduit to pull people into entrepreneurship. If it's done right, it's this phenomenal combination of the franchisor leveraging resources, buying power, brand recognition, all those things, and the franchisee operating the boots on the ground and the owner operator side of it. '09 came, the recession hit, and I was fired just with the downsizing of everything with the recession. And at the time seemed like a bad thing, but it was turned out to be a great thing, and it pushed me into starting FMS and franchise marketing systems. We do a lot of the same work I was doing before, which is helping companies transition into a franchise model: the planning, the legal documents, the operations and training manuals and programs, all of the marketing components. The one thing that I wanted to do that still today is our big differentiator is that we will also sell the brand. So we have a sales team. Once we build the model out, we will then go out and recruit franchisees, market it, sell it. And that, it's not rocket science, but that's really what has made us successful. And now 15 years later, we have 38 people on our team, and we've sold over 10,000 units, and done this with about 800 different brands, all different shapes, sizes, and industries of brands. But the one common factor is that they came to us looking how to get into the franchise model, and we built it out and then executed it with them.
Those are some big numbers. That's really amazing. I would imagine after 20 years, it starts to add up, starts to stack up. You get some momentum.
Yeah.
Um, so, what what's interesting to me is what makes the difference between you talked about having been able to see the inside of brands like Jimmy John's, European Wax, Culver's. What do you think is the difference between brands like that take off, and become, household names, versus new franchise concepts that they just never really get there or gain the traction? Is it niche? Is it the operator? Is it the team? What do you think it is? Or is it a combination of all of it?
Definitely a lot of factors go into how successful some of these brands are, or how unsuccessful some of these brands are. For one, a large majority of franchise systems are owned by one person. It's an entrepreneur that created a model and then started to scale it through the franchise model. And sometimes it just comes down to the entrepreneur either making good or bad decisions in where to take the brand and how to execute this. Um, the funny thing that I've done this now for long enough to have seen enough different systems and worked with enough entrepreneurs. A lot of it really does come down to the entrepreneur's vision. And you get, on one hand, you get some great operators that have enough vision to see the opportunity in franchising, but they maybe still have a little bit of a short-sighted mentality and focus. And then you have, on the other hand, you have these entrepreneurs that their vision is set on large, scalable growth and systems, and not the short-term dollars, but how do I push this brand forward? How do I grow it faster and bigger and more efficiently? So I think a big part of it is the founder, what their mindset is, their goals, and their vision for the company. I think the second most important thing, maybe, if I have to put them in order, and this is incredibly simple, but it's the viability and the unit economics of the location and the business for the franchise owner. If people make money, these things grow. And if they're doing well, they tell people about it, they sell it, it's organic growth, and you get this kind of like snowball effect where the systems grow by themselves at that point. The third element I would say is a probably a whole combination of factors, but one is the industry. How competitive is it? What is the unique selling proposition of the brand and the business model? How differentiated is it from others in the market? Jimmy John's was really the first to bring the delivery model to the sandwich space. Incredibly competitive market, but that was their selling point. As a result, their unit economics were strong, and it was just an easier sale because of it. Um, the other side of it, I would say, has a lot to do with the ability to replicate from a marketing and sales standpoint. And we work with a lot of different types of businesses. Fixed location models tend to be a bit more, the success of the unit tends to be a bit more tied to where the location is, how tight the operations are, maybe the type of advertising that they're doing to promote that location. But we do a lot of territory-based models, which are more outbound selling platforms. And now it becomes critical that we have a really tight sales and business development process, that we have a way to generate leads, drive people into a funnel, and ultimately really know the metrics of what it takes to convert a lead into a paying customer. And there are some great businesses who just haven't necessarily figured that out or don't have it incredibly tight. And those don't replicate as well as the ones where it's like, hey, push this button, put this much money into advertising, here's the script, here's the sales CRM, here's the process to take that lead to a meeting and then to a close. Those are the ones that ultimately franchisees are successful in, and then people want to be a part of it.
So I get multiple emails a week from companies asking to run ads on the podcast. I could have ads if I wanted to, but I don't. So there are two ways that you can help to support me and the podcast to keep it ad free. First is to like the video, subscribe to the channel, and leave a comment, even a smiley face if you have nothing to say. The YouTube algorithm only shows the video to more people based on the likes and comments on the video. So your comment could help someone get exposed to this, and not to sound too cheesy, but it could legitimately change their life. Lastly, go ahead and share this with someone that you think will enjoy this episode. Maybe someone who you know loves business and entrepreneurial stuff, or maybe it's someone who's been saying that they want to own their own business for forever. You can message it to them directly or share it on your social media. It would mean the world to me. You guys rock. Enjoy. It makes so much sense because no matter how great you may duplicate the operational system, I mean, you could have you could have SOPs and operation guides out the wazoo, but if you can't successfully acquire customers, that is the lifeblood of the business, like sales and marketing. Like that is the make it or break it. And so I think it makes a lot of sense. You mentioned, Chris, you talked about, okay, one of the factors that some of these brands that become so successful at is unit economics, meaning how well, what's the average performance of a territory or location, etc. So for folks that are looking and thinking, should I franchise my business? Like, would that make sense for me? What's the criteria that you're looking for there? Let's dive into, what do you look for from a track record, from a revenue standpoint, but what are other criteria that we may not be thinking of?
So the first thing I would say here, and this is what I spend a lot of my time doing every day and have been for 23 years, is interviewing entrepreneurs, helping companies look at the franchise model, evaluate it, and figure out whether franchising could be a viable way to scale the brand and the model. Um, I welcome the opportunity to speak with anyone who is interested in this. There's no judgment, there's no bad conversation. And my recommendation is the sooner the better we have these kind of conversations. So I'd put that out there to anyone considering this. Don't disqualify yourself. Let's talk about it. And maybe we put in place like a 1 or 2 year plan on how to get ready for this. But even then, I would always welcome the conversation. From a financial standpoint, there are benchmarks as to how long the franchisee should take to get a return on investment on what it took them to open the business. That's really the number one financial qualifier that we're looking at. How much money does it take to get in? All in investment, the build out, the construction, the equipment, the marketing dollars, the franchise fee, and then your profitability, your revenue growth, year 1 through 3 through 5. How long does it take for them to see that money all paid back where they see 100% return on that investment after factoring in all of the operational costs, including a manager? So what I mean is, if I'm running a restaurant and it takes $100,000, $150,000 for me to open up a new location, the franchisee would have to make that investment. And over 2 years, I can show profitability of $150,000 after paying a manager to run that location. That's a great number. In fixed location models, usually I'd like that ROI to be within 3 to 5 years. Some of the
And
higher
that's off of the
investment
bottom
models,
line profitability.
bottom line profitability. And in a service model, I probably would want to see 12 to 18 months. And usually in service models, there's not as much upfront investment, so that number is a bit easier to hit. You also don't have a cost of goods in a lot of service models, so the profitability tends to be higher. But those are the general benchmarks. Now, some models will be outside of that range. Like if we're buying real estate as part of the investment, that's going to change the metrics. We've seen that with brands like Primrose and some of the preschool models where there's a really high investment because they're usually wrapping in the real estate. We've done a couple of trampoline park models, same thing. The metrics are different just because the scale of the investment's different. But that's the first thing we would look at. The second thing we would look at, going back to the marketing and sales side, I want to see a tight franchise marketing model in place where you know, as the business owner, what it takes to get clients, what the cost of acquisition is to get clients, that we have a consistent lead gen process, that we have a sales process, things like a good POS, good CRM, uh, good digital marketing campaigns, social media management, all that stuff that really, if we're in business today, we should be doing anyways. We need to have that in order to teach this to someone else and effectively duplicate it. The third piece that we would look at is how tight our operational systems are. And I would put an asterisk by this one because it's definitely part of where we or someone like us could come in to help structure, help refine, help put processes and procedures down on paper. It's a big part of what we do if we're helping a company do this. But what we can't have is a business where the entrepreneur is running 95% of it. They're working 20-hour days and they're running around like their heads on fire. And if they stop working, the business falls apart. That's the kind of model that it's working, but it's working because the entrepreneur is special, talented, and driven. There needs to be some element of a system, whether it's they've hired people to take on job responsibilities, they've opened up a second or third location, they've proven that they have an understanding for the day-to-day operations and how to teach that, how to replicate that. Ultimately, that's what the franchise model is. It's this business in a box that we're giving to a new owner. And what I always say to a franchisor or franchisee, franchising does not guarantee success for a franchise owner. And it also does not mean that the franchisee doesn't have to come into this with that fight and grit and passion and work ethic. You don't just buy it and then it makes money. What it should do, what a good franchise should do, is help that franchise owner skip year 1 and 2 if they started on their own. They effectively jump to year 3 in their growth. So if I go out and start this thing on my own and I'm just fighting and struggling and making every mistake in the world as an entrepreneur, it's going to take me a couple of years to figure it out. My profitability is going to be lower. I'm just not going to grow it as quickly. A good franchise model says, here's the path, spend the money on marketing, hire these people, use these vendors. And it's like, it gives me that fast pass around those first couple of years where I'd be struggling otherwise.
Franchising is recognized as one of the most proven business models in the world. Chris has been generous enough to provide a free ebook to you guys if you're interested in learning how to franchise your business and really learning how to duplicate your business model while getting paid for it. So if you want to grab this book for free and be able to read it and learn how to franchise your business, then go to franchiseempire.com/FMS podcast. I've experienced that myself, which was for about 7, 8 years. I attempted to start about 9 different businesses. Some, you know, better ideas than others. Clothing line, landscaping business, online marketing, all kinds of things that I don't think I generated a gross higher than $25,000 of in any of them individually, uh, and probably less than 100 grand collectively. Um, and what was fascinating to me when my wife and I opened our first franchise, and it happened to be in the juice and smoothie space, was to, our first, second month to do $30,000 in sales, and the first year to hit just shy of $500,000 in sales. And it was like, whoa, this is crazy. Now, sales isn't everything. Yes, you got to you got to count the margins, but you got to generate the sales in order to get the bottom line profit first. And to me, it just blew my mind, and it completely changed my confidence level. Because at that point, Chris, I started to question and doubt, is entrepreneurship for me? Can I ever do this? Maybe I'm just not cut out for it. I keep trying and failing and not following through and getting confused and overwhelmed, and like you're saying, kind of skipping those first couple of years. And so with my personality, to be able to come in and have a plug and play system, essentially, man, it changed everything for me. And yeah.
I love to hear that story because I went through the same thing. And I think so many entrepreneurs have, not only looking at the franchise side, but just entrepreneurship in general. Most of the most impressive entrepreneurs that I've worked with, they had so many failures to get to the point where they had a big win and a big success. And at face value, nobody sees that. They just see, here's Tarek, he's successful, he's made it, everything he touched turned to gold. And that was one of the biggest learning experiences for me, not only just seeing it, but I went through the same thing with a senior care business, a restoration business, a restaurant, and none of them worked. And I'm sitting there looking at it, and I'm like, I feel like I'm a franchise consultant. I'm doing all this stuff. I should be successful here. I should be able to make this work. And then I went into a franchise system, and I was in the shipping business, and same thing. It worked. There was a system in place. They required certain ad dollars. I hired the right people. They helped me with finding the right staff and management team members to do it, and all of it clicked. But I think the learning lesson there was twofold. One, that franchising does work when it's with the right system, but two, also, you've got to keep trying. If you're committed to being an entrepreneur, you have to keep trying and keep going at it. And the first time I saw it with one of the most successful brands that we launched was a brand called Restoration One, that we started with one location. The guy, I sold the first 3 franchises for him out of the basement of his townhome. It was like as grassroots as you can get. And before that, He had started a car import business. The cars got hijacked by Somalian pirates, so he went out of business. He tried to become like a financial advisor, trader, out of business. Tried to do a window shade. Like every one of them was such a bad story. And I'm like, here you are though. He had a phenomenal exit. He sold the company for a ton of money. People would look at you and just assume that everything's worked for you. And you never had to go through any of the tough moments. But it's like, no, he had a ton of losses, but he kept trying. He kept having that vision. And that's what it takes.
It is. I love it. And you know, you mentioned the word grit earlier, and it's funny because that keeps coming up. I just did in the last two. This is the third consecutive podcast interview I've done where the guest has mentioned grit. And man, I love that word. I just love it. And it's yes, it's absolutely right because the system is there. It, but you have to have that grit. And you know, entrepreneurship's not for the faint of heart, and if you don't have that grit, don't start a business. Just, you
Yeah.
know, it's okay. If you do have that grit, then you may need to fail your way forward, which is also okay. It's that ability to get back up again. um, here's a couple of interesting things. So you talked about how that owner had a significant exit in their business. So let's talk about like what the opportunity is. What does it look like after someone franchises, you know, their business? What does that growth look like and that potential opportunity to be acquired? And like where would they need to be in terms of their business? And are these people seeking out groups to acquire them? Does it happen naturally? Like tell us what, you know, what your experience has been from your side of the table.
So franchising has always been an effective way to build an exit strategy. And we're talking about a lot of the good things of entrepreneurship here. One of the bad things is that a lot of entrepreneurs get stuck in the business. They become the number one employee for the business, and they're kind of stuck in the grind forever. And the reality is, in that scenario, the business isn't worth much. Everybody knows if they buy it and the entrepreneur is running 90% of the job, it's not going to work well when they take it over. And as a result, a typical business that's owner operated might get valued at 2 to 5 times your earnings. So if you're netting $100,000, the maximum value is 500,000. If we're taking that ratio, realistically, it's probably like 300,000, a 3 times multiple. Up until 5 years ago, the typical franchise system valuation was somewhere around 12 or 13 times earnings. So that same business that's proven that it can duplicate, or you've sold franchises, you have other people running the model, they're paying a residual monthly or weekly royalty feedback. Now it's worth more because those agreements transfer and the franchisees transfer with, and it's worth more to a new buyer. Since the pandemic, this significant move of venture capital, private equity firms coming into franchising has been it's just happened in droves. There's been a ton of gigantic exits. That company I was referring to earlier was one of them. But in the last 3 years, we've had a dozen brands that have sold for right around $100 million or more. And part of that's driving it
Aggregate or individually?
individually, each one. And part of the reason that's happening is the ratio for how these are valued has gone up. Now it's probably closer to 19, 20 times earnings. So that same business where the guy is working his butt off in the day-to-day operations and he sells it, it's worth 3 times $100,000, 300,000. That $100,000 now at 20 times becomes a $2 million valuation. So part of it's the ratio. The other part of it is that the systems that sell for that much usually have 100 or more locations. They've really tightened the model. They've proven that it duplicates. They've proven there's a market for it. They've developed some element of a brand recognition in their market. Um, almost every one of those, well, I would say every one of those was sold to a private equity group. And when we're talking those kind of dollars, that's usually who the buyer market is. 10, 15 years ago, it used to be you went public to see that kind of a return off what you built. Now the regulations, the cost, all of the filings and things that you have to do to go public, I think selling off to private equity is the better route when you have this sort of a potential exit. So that's the other part of it that's fueled it. You've got many, many more big players, big investors, and big dollars that have come into franchising, and it's just fueled the market. Um, Kind of the offshoot of that that's been really interesting. I've always been a big fan of service models. I just think they make so much sense where the investment's lower for the franchisee, the margins tend to be higher. If a franchisee wants to come in and scale it, they can hire more people, buy more trucks, all that kind of thing. Service franchises were always looked at as like the stepchild of franchising. I mean, they just were never given the same respect that fixed location models were. That completely flipped with COVID. Now, almost all of those exits, actually, all of those exits were service brands: painting, roofing, restoration, landscaping, dumpster rental. I mean, tree removal. You know, it's a lot of models like that where I think the numbers show well. They're appealing both for the franchise owner and as a result for the franchise or and that's I think helped drive the market too, because you've got these kind of untapped markets which have just exploded onto the scene. And again, a lot of this also is driven by the fact that the franchise market has grown exponentially. The last I saw a statistic from the SBA, the number of new business startups in the US was like 3x the highest number it had ever been. I think that was 21. 22 was higher. I'm sure 23 is going to be higher. I think we're seeing a little bit of a leveling off. But that's ultimately what's driving it. You've got people saying, I'm sick of relying on someone else to tell me how much I can earn. I'm sick of someone else deciding whether or not I have a job. You know, all of a sudden all these layoffs happen and cuts, and I'd rather be in control. And it's worth it for me to take the risk and the leap into becoming an entrepreneur. And some of those folks end up in the franchise market, and that's really what's driven a ton of it.
Hey, I hope you're enjoying the podcast episode so far. One of the most consistent things that we hear from people that reach out to us is that buying a franchise feels really confusing. There's so many options out there. It's a scary decision. They don't know how to vet or do the due diligence or really narrow down on the right franchise for them, and then they really feel alone in the process. You might be the only one in your family who's ever pursued buying a franchise or being an entrepreneur, or maybe you've tried to start a side hustle before, or other businesses like me. Like before franchising, I was not able to crack the code on entrepreneurship. I'd like to invite you to reach out and work with us. We've helped many clients buy franchises, get them profitable, or buy resale businesses that are thriving. Talking about highly profitable resales, great value. We've allowed many of our clients to actually quit their job right away and replace their income immediately. So if you want to work with me and my team on finding or buying a franchise, doing due diligence, vetting it, or resale, then go ahead and go to tarzjohnson.com/consulting, and we're happy to see if we can help. All right, enjoy the rest of the episode. Yeah, there seems to be this massive cultural shift where, 20 to 30 years ago, it was really go to school, get a good job, and that was really the kind of the cultural standard, the advice going out. And there's been this massive shift towards entrepreneurship. I mean, between the creator economy, what the gig economy, just there's all sorts of opportunities. And what's interesting is even though franchising has been, blowing up and really growing, I don't think it's really become mainstream yet. It hasn't trended yet, in my opinion. Do you agree with that?
I do, yeah. And I'm sure you get this a lot too, where like you tell someone you're in the franchise market, and they're like, "Well, how does that work? What is it? Tell me more." The average person, I think you're right. It's not something that is looked at as one of the primary centric business channels. But I mean, if you look at the overall consumer market, I mean, the average person probably buys something from a franchise just about every day. I mean, it's a crazy, crazy how big the market is, just food service alone. But then if you expand into all the other industry segments, I mean, we've franchised some really, really unique business models. Um, One where you go to pay to rent tractors and you play basketball with excavators and have contests on how you can push mounds of dirt around. Um, One of the more interesting ones that we franchised was a franchise where she took a herd of goats and would herd them into your yard, and they eat everything, like small trees and bushes, and so it's literally landscaping done by goats. And but it's part of what I love about this business, where I have so much respect for entrepreneurs. I love small business. I love the passion and the willingness to take a risk and do something different. And then you get to see these just wild ideas where it's like, man, that is so cool. You completely broke the mold of what anyone thought was possible before. You probably went through all kinds of ridicule from your family, your friends, anyone you know, and you did it. And now you have the successful model doing something that is totally different from what others have done. Um, so it's been a lot of fun, and that's what makes the whole business so exciting. On top of seeing people become an entrepreneur for the first time, that part I just absolutely love.
Yeah, it's incredible. And I know we have a special link and for folks that are kind of interested in learning about franchising their business. Um, and so you wrote a guide, an ebook on that. Tell us a little bit about what's in there
So
and what they'll learn.
yeah, so most of my day is spent, I guess it's probably split, but half my day is spent working with clients to implement and execute the franchise model. The other half of my day for 20 plus years is spent helping entrepreneurs educate them on franchising, look at the franchise model. Um, I think there's a little bit of like a mystique around franchising, and and it maybe is scary, it maybe is just unknown, and in the end it's scary because of that. But a lot of what I'm doing is trying to demystify the whole idea and how it works, addressing concerns, helping them look at the business model and understand, is franchising an opportunity. um, One of the things that we'll do is we'll do a quick competitive analysis. So if I'm talking to someone who has a restaurant model or a pizza place, we can pretty quickly pull up other brands and fees and successes and wins and losses that they've had, and give them a feeling for how this could look. Um, in the ebook and through conversations, we try to stay as unsalesy as you can possibly get. It's all about, let's give you a real look at how this model works, how this industry works. Let's analyze what you have for your business model. Let's look at your financials. Let's look at your day-to-day operational procedures. Let's have an open discussion about where you'd like to go with this. What do you want to do with the business model? And if it makes sense, how all this lays out and whether franchising is something that you'd like to explore, then here's how we could help you get there. Um, this is a model that definitely, if we don't have an interest, if the entrepreneur doesn't have an interest in opening up 10 locations, it probably doesn't make sense. Like if the goal is to hey, I'd like to have one or two more locations close by, partnerships, company owned locations, those sort of models could make more sense. As soon as we get around that 10 unit threshold, there's so many reasons why someone should be looking at this model. In the franchise model, it gives us the ability to raise capital without sharing equity. That's number one. So if I own a business and I want to get money to help grow my business, and I go out and let's say I bring on an investor and they put money into my business, in return, I have to give them equity, ownership, and some degree of control in my brand. All kinds of complications come from that. The other option is I go to a bank or a lending institution and I borrow the money to do it. Now I'm in debt. I have decreased cash flow. I have regular monthly commitments I have to make back to pay that loan back. And usually, when I open up a second location that I own, the cash flow now is squeezed because I've hired more people to run it. I have this debt structure on top of that. Odds are, with less of me in that business, it's probably not operating at the same performance that my original one does. All these things position me for potential downside risk. In the franchise model, the franchisee pays me a fee to open the location, usually $25,000 to $50,000 up front. That's a direct investment to me, paid to me, and I don't give any equity. I'm essentially letting them use my brand and use my system, and they're renting it from me as long as they're compliant with the franchise model. The second way they make an investment is they then pay to have that business opened up. Whether if it's a restaurant, construction, equipment, signage, labor, all of that investment is their responsibility. That money doesn't necessarily come to me, but they're making that investment to open up another location of my brand. Beyond that, and in today's market, the operational side of things, the labor side of things is just tough everywhere. I think it'll get better and better here as we go. But when you put an owner operator in a location, a franchise owner, it effectively removes you as the franchisor from the operations side of the business, which in today's market might even be a bigger benefit than the capital side of it. The last piece of franchising that I'd say is one of the big reasons that companies look at it is the ability to scale quickly, capture market share, and ultimately increase the company valuation. We talked a little bit about some of those huge, huge exits, those $100 million plus exits. There's also so many versions of really big wins that happen because of franchising that didn't make the front page of the Wall Street Journal. But we had a pie making company that she opened up 11 of these locations and sold the business for 16 times multiple. We had an estate sales planning company that she opened up 27 of these and she sold it for a 19 times multiple. It doesn't have to be a $100 million exit for this to be a big win. And franchising allows us to get to that point where A, it's attractive to a buyer, and B, the price point is something that we could justify walking away from what we've put our heart and soul and blood, sweat, and tears into.
That isn't, I mean, that's incredible because the average, the average business owner that they're not a franchisor. I mean, they're probably selling for somewhere between a 2 and 4 times multiple. I mean, to be able to, for the industry norm to be somewhere around, 12 to 13 or 15 and people selling at 19 times multiples. I mean, that's just incredible. I mean, that's a game changer. And I think it's a lens, Chris, that, I mean, it's your everyday that you're dealing with this and having these conversations. But for folks that are thinking, I think a lot of people think about franchising from the should I buy a franchise perspective. But for some of the people that are purebred entrepreneurs out there where they got the vision and they know how to kind of scale things, the idea of buying into someone else's vision, they're like, I don't really want that. I mean, plan it out, find an industry to disrupt, go start a business from scratch, prove that the model works, and then go franchise it, right? I mean, it's a totally different way to think about it. Have that as your game plan from the beginning when you start the business. Have you dealt with any of those scenarios where someone thoughtfully and tactfully went and started their first like corporate location with the goal of, okay, I'm going to get this successful, then I'm going to franchise the business?
A lot. And usually once someone fully comprehends and they've seen how this works, they understand the dynamics of the franchise model, that happens a lot. They then look for another brand after they've sold one. They start a new business with the intention to do that. The the reality is that the same mindset, and I always recommend that people read Michael Gerber's book, The E-Myth, if an entrepreneur has not read it. Crazy simple read. And the whole principle of it is that you need to elevate yourself out of the business and become the true CEO of that business and not just the operator. in order to one day grow it or sell it. And one of the points that he makes is that franchising could be a channel to do that. So I think all of the things that you as a business owner should be doing and should be thinking about, whether you franchise or not, are good for the end result here, which is creating a model and a business that is not just a job. And so many entrepreneurs, we end up pulling ourselves into it. And I'm not above that either. I certainly get roped into doing things that I shouldn't be doing, that you need to delegate, you need to create a system for, you need to put people in position to be successful to do that. I think franchising in a lot of ways just forces that hand. You are now putting someone in position to be a business owner with your brand and your business model. You have to delegate. You have to teach. You have to have good systems. You need to look at this bigger than what you can do with your own two hands in order for it to go. One of the recent examples, just last week, we sold a first franchise for a husband and wife team out of central New Jersey. And they've been in business for 11 years. They have a senior care business where they take care of seniors' wounds, like a wound care business. And it's mobile. And you drive around, go to the location or go to the customer. They've tried to open up new markets over the years and couldn't do it. They couldn't find the right people. They couldn't manage it effectively. We franchised the model and went live about 6 months ago, 5 or 6 months ago. We just sold the first one. We have another one that's in the works in Atlanta. I'm sorry, the first one's in Atlanta, another one's in the works in New Jersey. So these two brothers in Atlanta bought the franchise. They paid them $35,000. They invested in the vehicles. They're now investing in the marketing model. They're starting to advertise. They're going to be paying them back 10% of their revenues every month. They now have a vested owner operator in Atlanta running that business, and it didn't cost them any money. They made money with the expansion. They have effectively doubled the size of their business. They've doubled their presence, they've doubled their market coverage, and someone paid them to do it. And you look at the comparisons, like all of the money and the cost and the time and the effort, if they'd opened that up as a company location, that this model just can make so much sense if it's done right and if it's executed correctly, even at a micro level. And certainly the upside is way big, but even at a very basic micro level, it can be so efficient to help that entrepreneur get off that ground level and start to cover more markets and have it make sense financially.
Yeah, that's a really cool story, and I'm excited for some success stories that we'll be able to share, and that you've worked with a couple people that we've introduced you to. One is someone who I coach, who has a business in the, I guess you can call it, home service space, where I don't want to spill any beans here, but I think he's just going to crush it. I think this is one of those industry disrupting niches. So I'm super excited to see where that goes. And then with someone else who was in my warm market, someone that I knew who's in kind of the mobile food space, and he's franchising his business. What's interesting is when I had initially talked to him, he said, "Yeah, I think I really want to go the licensing route. I think that's what I want to do. I don't want to, you know." I'm curious, and I think we'll close with this question, but what's the difference between franchising and licensing, and when should someone not franchise their business and maybe look at licensing instead?
So a license model is basically when we sell the right to use our name to a third party, and they pay a fee to operate under your brand. Um, a franchise model is when they pay a fee to use your brand and your operating systems, and the two are like crazy close as to what constitutes a franchise or what constitutes a license. Um, the reality is that the franchise rules in general make it difficult to do a license model and not cross over into a franchise model. If
Mm,
it's very clean and there's like no training, there's no manuals, there's no operational requirements, it's just, hey, you get to use my name in your business. You can do licenses, and I have had a whole number of brands that started out as licenses and then transitioned to franchises. Maybe we could do one or two and then look at a franchise model. I just would never recommend a license platform if the intention is to scale it out in any level of significance. You'll be
Mm.
okay in most cases doing this in just a handful of one on one instances. But if we do it in a whole bunch, it's kind of inevitable that we'll have problems. And I learned this the hard way years ago. We sold a license model, and it came back to bite us, which I just wouldn't recommend to anyone. If the intention is to go big, that we definitely should look at a franchise model. The franchise model allows you as the owner, a to require them to use the brand, but B, everything they do in the operations you can hold them to, like how they interact with the customer, the quality of the product, the quality of the service, the reviews that they get. We can hold them to a certain minimum. The vendors that they use, the way that they staff and operate, the culture, all those things that have made your operation successful, you kind of need to infuse in a third party who's just coming into the business. They need that stuff. So I don't typically recommend it unless it's a totally clean cut sort of license model. Again, sometimes it might work in a one-off kind of situation, but then if the intention is to go beyond that, I'd probably recommend we flip gears to a franchise model. But ultimately, if you're thinking scale, you're thinking duplication, your mindset's in the right track. I mean, that part I like, and that's really good.
Yeah, it's interesting. I've heard a number of stories of individuals who started scaling their business through licensing and then wind up getting fined um, by the regulatory body in their state because they were actually meeting the definition and illegally operating as a franchise unknowingly, and then having to shift their business to an actual franchise model,
Yeah,
which I think is very interesting. One story comes about. There's a guy who has a huge social media presence and following, Bedros Koulian, and he owns a franchise called Fit Body Boot Camp.
sure.
And he talks about how he had initially licensed it and they were growing to a bunch of locations, and then the state of California came after them and said, "Hey, you're actually operating as a franchise, not a license." And then they've been a franchise for quite some time now. So yeah, very very interesting.
You can tell Bedros that I went through the same thing and had California tell me I was not doing it correctly, and so from that point forward, I will very seldom ever recommend that a license model makes sense. It's so much safer, it's so much more consistent, and it's so much more. It's looked at as the gold standard. Like franchising is the top level of a third party distribution system. Licensing, dealerships, business opportunities are all some like lesser version of this. So if the intention is to go big and scale this and do it in a lot of markets, absolutely. States like California, Washington, Maryland, New York, you can't mess around with it. I mean, there's almost no wiggle room for what would be considered a franchise and what would not.
Yeah. Cool. Well, Chris, thanks for coming on. Guys, if you're interested in learning how to franchise your business and getting the download, that free ebook, we mentioned this earlier in the episode, in the intro and throughout, that you can go to franchiseempire.com/FMS podcast. You'll be able to set up a call with Chris's team too, if you'd like. But Chris, man, thanks for coming on. I feel like this is part one of the conversation. I feel like there's so much more we can unpack, but yeah, really appreciate you coming on.
Man, thank you so much, and I love what you do. I love the way you communicate. I think you are one of those people that has an ability to help people see entrepreneurship, help make it a path that they can see for themselves. Just appreciate even being part of it, and thank you for letting me be on the show here.
Yeah, thanks for the kind words, man. Appreciate it.
Absolutely.